this is a very bad, ominous situation where a handful of stocks, it's an inverted pyramid. You got a tiny little bit, a matchstick holding up the whole pyramid because there's just a handful of stocks. And what are the most knowledgeable investors doing? Using that misdirection. Look at the shiny objects over there, and using it to gobble up all of the world's commodities. And so this is why so few people ever succeed in investing, because they follow the herd. But the knowledgeable investor, the big money, the ones who really get it, they understand this is a world of commodities.
So, you've touched on commodities throughout this first half of our conversation quite a bit, and I want to touch on that now. For the last 40 or so years, the 60-40 portfolio, that's worked well. In recent decades, passive flows from retirement accounts, automatic withdrawals, it's funneled massive amounts of investment dollars straight into the same companies, spiking their market caps. Before the pandemic, no company had a market cap in excess of $1 trillion. Today, there's 7, with 5 in excess of 2, 3 of them in excess of 3, and that's all happened in just the last 4 years. With that as the backdrop, and all the overvaluation and the concentration in these stocks that's happening, are you anticipating a rotation out of those and into what's been undervalued and lacking concentration, namely the hard assets? Are you looking for this rotation on a historic level? How do you see that playing out, and over what time frame?
Who's the most knowledgeable investors on the planet who know the playbook? The central banks. They've been buying for 4 straight years, using the suppression of the paper market that we create to support the illusion of strength of bond market and currency, to de-dollarize, de-treasurize, and buy as much in the way of commodities as they possibly can. What was gold reclassified as in 2019? Oh yeah, the world's only other tier 1 asset. How'd that 60-40 split work a year ago? It was the worst ever in its history of the 60-40 split, where, stocks, 60% stocks, 40% bonds, the worst ever. And as rates continue to rise, it will get even worse. And that's, you say 40 years, go back to 1982 and look at a chart of interest rates. It's a ski hole straight down. Anyone will look like a genius when you buy assets that are inversely correlated, their wealth, to a falling of interest rates. Rates go down, they go higher. Your house, what's your house worth at 3% mortgage versus 9 or 10%? What's your bond portfolio worth as rates fall? It's worth more and more and more. So So the real suppression in all of this has been of interest rates. It created an illusion of prosperity, turns people's homes into an ATM. As the price of your home that you bought, my parents bought the home that I grew up in as a kid in Minneapolis for $75,000, sold it for almost $1 million 35 years later. And so did the house go up or did the dollar go down? And when you talk about looking like a rock star, when you buy assets, both real estate and securities, in a declining 40-year declining interest rate environment, the greatest bull market ever. Yeah. What happens just as bullish as all of these? And you talk about the stocks, look at the Russell 2000. Almost all of them are underwater. That is an indication of the broader economy, not 4 or 5 stocks, including GameStop and Nvidia, which is a South Korean company, and Apple leading the way, and the rest are shitting the bed. I'm sorry for my language. I shouldn't say that, but doing poorly. And this is a very bad, ominous situation where a handful of stocks, it's an inverted pyramid. You got a tiny little bit, a matchstick holding up the whole pyramid because there's just a handful of stocks. And what are the most knowledgeable investors doing? Using that misdirection. Look at the shiny objects over there, and using it to gobble up all of the world's commodities. And so this is why so few people ever succeed in investing, because they follow the herd. But the knowledgeable investor, the big money, the ones who really get it, they understand this is a world of commodities now, not promises and debt and opaque debt instruments. So yeah, there will be, but by the time that flip happens, the biggest money in the world, the most knowledgeable, who write the playbook, like for example, in 2017, when the Bundesbank and all of those Eastern European banks started repatriating their gold after 6 years of gold going down out of nowhere. And then next year, 2018, those groups bought more gold, those banks as a group than they did in the 60 years previously combined, doubled that amount in 2019 after they all brought their gold home from the Fed and the Bank of England. And then the BIS says, oh, by the way, we've now reclassified gold as the world's only other tier one asset. Do you think they were told this is coming? Get your house in order, start buying gold and repatriate? Of course they were. It's a good old boys club. So they know the playbook. And when you see them using this massive amount of Western suppression where contracts are created so many times, hundreds of times over on the same ounce of gold, allowing them to manage its price rise. But that was when no one stood for delivery. Now all of these countries stand for delivery, and it's all changing. Yeah, I don't think we've even begun to see anything yet as to how this all plays out, but there will be a shift. But people are too dissuaded by price and they don't look at fundamentals. But when you have a Western media that does, not only do they not do a poor job, they do no job of telling us what's happening, that there are very well-read people who just read the wrong stuff and will be run over by what they have no idea is coming. They don't see it, so they'll get run over by it, even though they are considered to be well-read. And in an environment where for 40 years, lower and lower interest rates made anyone invest in traditional assets look genius, and all that expansion of credit and cheap money created distortions in asset prices. Just as that massive amount of credit and cheap money did that, what happens when banks start to fail and the contraction of credit is brought in hard, where you see the fourth largest building in St. Louis, the former One AT&T Center, 44 stories tall, was sold for $205 million in 2006, just sold for $3.7 million. $3.7 million. You too can own the fourth largest building in St. Louis.
That's happening all over the country.
Yes. And so as that starts to hurt the banks and the banks start to collapse and rates go higher, the contraction of credit. Think about how much credit is used to bring a loaf of bread to the store. The farmer who has a combine and diesel fuel and seeds is on credit. When he harvests his field at the end of the growing season and gives it to the trucking company, the wheat, who brings, they're on credit for the trucks and the diesel fuel. They bring it to the flour mill, who's on credit, who refines it and gives it back to the trucking company, who's on credit, who brings it to the baker to make the bread, who's on credit, gives it back to the trucking company, who's on credit, who gives it to the grocery store, who uses credit. Now you got a loaf of bread in the grocery store on the shelf, but how many pieces of credit touched that? You start to rein in credit, the whole thing collapses. So I think you will see a credit contraction that will freak people out to levels that they cannot believe. The funny thing is, most people in this country, even the well-read ones, don't even know that bail-in legislation was signed into law in the Dodd-Frank Act. Have no idea what that means, and I suggest you all read it. Bail-ins, Dodd-Frank law, and then ask yourself what would happen when one of these big banks collapses. It's the beginning of a daisy chain where people will run to commodities, and who will already be sitting in them comfortably? Oh yeah, the most knowledgeable traders on the planet, the central banks who write the playbook.
Well, let's focus on gold a little bit here for a moment. You know, the Western investor seems relatively absent from the gold trade, while the central banks are buying, the Asian populations buying, the Indian populations buying, the Middle Eastern populations buying, but the Western investor seems to be relatively absent. What do you think is going to bring them back, and what are you hearing from your own high net worth clients regarding the economy, markets, and why they're buying gold and silver?
Yeah, well, I think that this is why so few people ever succeed in investing. They follow the herd. And we've all of a sudden come into this environment, Gary, where instant gratification is not fast enough. I mean, my mentor, Richard Russell, used to say, if you make 7% per year, you're a rock star. Well, gold's averaged 9.9% per year since 2000, unnoticed in an environment where Bitcoin goes up thousands of percent and where NVIDIA goes up thousands of percent, and bang, you're wealthy. And this instant gratification in a over leveraged, undercapitalized world is a mistake. And, you know, I think that, you know, the speed in which people want to become wealthy is creating an environment where they don't notice exactly what is happening. I don't know how this all plays out, simply to say that I think this system starts to break and commodities will be realized as asset classes that are far more valuable than the currencies that possess them. But I don't know how that plays out because people have been enamored with immediate return. They're ignoring the price of gold largely because the Western media has painted it in such a negative light. And it's an archaic relic from the past. It's no longer needed. It pays no interest. The funny thing is, if you were to in 1960 to make a decision, your parents said, look, Grandpa left us 435 ounces of gold, and ironically, gold's $39 an ounce. That's the price of our house, $17,000. 435 times 39 is real close to 17,000, which was the average price of a house in 1960, according to the Census Bureau. And the decision was made not to spend the gold, to keep it because Grandpa gave it to us and we're going to save it for Gary. So let's put it under the mattress where it's been earning nothing but dust for the past, 63 years, and take out a mortgage. And so that $17,000 worth of gold, that 435 ounces, well, what's that worth today? That 435 ounces today is worth over $1 million. And that's an asset that's earned no interest. And how about the value of the house at $17,000? Well, the average price of a house now is about $400,000, according to the 2024 Census Bureau. Buys you 2.5 houses. What gold does is it keeps pace with inflation. Gold doesn't go higher. The currency that we value it against goes further down, falls with inflation every single year. When my father graduated college in 1964, he dreamed of getting a job that paid $10,000 a year. The first Corvette Stingray he bought in '73 was $6,000. Now it's $130,000. So when you talk about gold not keeping pace because it doesn't pay a return, it's a bunch of nonsense. Since 2000, it's outpaced every single asset class but Bitcoin, including the S&P, even with reinvestment of dividends. And it's up. It was $252 back then. Now it's almost 2,400. You tell me. I would say that it is the realization that gold is the anchor to a system that will preserve your capital and can actually retain and accentuate your purchasing power. This is not lost on the central banks, but it is on the investing public. So, I think it will take when you realize that there's 0.5% allocation in metals from Joe and Jane Sixpack to the Harvard Endowment Fund, we're woefully underallocated to it. By the time people realize they need it, even if 5% allocation would be a tenfold increase in demand like that, everything would be gone. It would be too late. And so most people will, by the time they realize it, will be shut out of getting anything of any utility or value. And I guess that's why you see the big money, the ones who understand where we're going in a completely different direction than all the so-called expert hedge fund investors and whatnot who are investing in NVIDIA and Apple and all of these stocks that are very long in the tooth, horrible breath, where the Russell 2000, which is saying the economy sucks, but these 3 or 4 stocks, they're pushing the indices way higher because of their weighted value in the indices. It's a very bad omen. And I think when it does flip, it will freak people out to a degree that renders them shut out of a market that very quickly runs out of product. Quick.
Yeah, I can't agree more with that. Andy, between the electrification of everything, the clean energy movement, the artificial intelligence explosion and its infrastructure build out, the rise in geopolitical tensions that's forcing all these countries to rearm with modern weapons, and the rising up of more than 120 million citizens in the Asian circle into the consumer class, the need for silver is high and is set to explode, it looks like. At the same time, annual silver deficits, they're rising and they're accumulating. Above ground stocks, while massive, have been getting used and will eventually deplete significantly. What's your silver thesis and expectation over the next few years for the metal?
Well, it's decreasing in nature from 16-1 to 7-1. That's God's ratio. Used to be for 5,000 years, there was a ratio of 16-1. Geologically, it's now 7-1. Silver is found in the ground like your skin is epidermis. Silver is found in a form called epithermal, right near the surface. Big deposits were found decades ago, even before advanced imagery. And so much so that of this mine supply we talk about, only 30%, roughly 300 million ounces, comes from companies that mine silver. The rest comes from over 500 million ounces, 600 million ounces come from companies mining other metals that stumble across it as a byproduct of what they're mining. It's depleting in nature, yet it is increasing in demand in a green and digital world. Military applications, high-tech military weapons, and aerospace needs copious amounts. And this is why I believe you've seen the West suppress the price. There's so much silver used in the guidance systems of 500 ounces in the tip of a Tomahawk cruise missile. I was told this by a Department of Defense analyst who said it's declassified. Google it. You'll see all over the place. 13 to 14 kilograms in the tip of a Tomahawk. All the missiles and high-tech weaponry. This is why the commercial banks are suppressing it. The military-industrial complex needs it. And what you see on the London Metals Exchange is trading almost 3 billion ounces of silver per day when we only mine 800 million. How the hell does that happen every single day? The papering over of the silver price to suppress the price has created massive distortions. The value of silver, we don't even know what it is because of the largest concentrated short position on COMEX of any commodity ever traded is by a handful of big banks, Western big commercial banks, holding down the paper price of silver. It's as dumb as a mud wall. Thing of it is that the stockpiles of silver are disappearing. The lowest level ever on Shanghai Gold Exchange, 700 tons. And the interesting thing is that it started falling in March. In March, if you go on the Shanghai Gold Exchange website, you'll see 4 weeks in a row, first HSBC Bank, Deutsche Bank, JP Morgan, and Standard Chartered. These are all four big shorts in the silver world who show up at the Shanghai Gold Exchange. You cannot export gold out of China, but you can silver. And just as they start coming, according to their own website, the silver stockpiles start to bleed down. What did they say to the Chinese? Help us. We're about ready to blow up because of all of these contracts. People are standing for delivery, like India, who bought double what they bought, more than they bought last year in the first quarter of this year. They bought 600 million ounces in the past 2.5 years. That's 10 times what is on the COMEX registered category. That's twice what is supposedly available on the LBMA. And they bought it in the last 2.5 years. They are standing for delivery. When these exchanges were founded, no one did, and no one had the ability to do it. No one had the sophistication. And when you realize that COMEX is a 1,600% rehypothecation on silver, meaning if you have 16 people all own a contract, think they own it, it's based off of one 5,000 ounce lot of silver, and everyone stands for delivery. It's Bernie Madoff. 15 say, sorry, you're out. Here's cash, hopefully. It's force majeure. The system shuts down. One would get the medal. And it's many times that on the LBMA. So these Southern Hemisphere countries understand this, and they're standing for delivery. This is how you beat the West without ever firing a bullet. You stand for delivery, and these obligations that the biggest banks in the world have made, they'll default. And then everyone runs to get it. And no one trusts the system, and bang, the whole thing blows apart. Silver is the most undervalued asset on the planet that has been distorted to the umpteenth degree by a bunch of brain-dead, bonehead Western commercial banks, probably representing the military-industrial complex needing copious amounts of silver to fund and fight all of the wars around the globe to make high-tech munitions. And in a world that's going green and digital, the need for silver is real, let alone it's experienced a monetary renaissance, and it's depleting in nature. So you can't find a better setup, an asset that has an expansion in demand and a decrease in supply and a distortion in real value based upon suppression. I don't think I've seen a better investment. It's the investment of a generation. And as God is my witness, I mean that.
So let's talk about silver as a monetary metal for a moment. Andy, there was once a time when we could take a silver or a gold certificate to the bank and get equal amounts of the metal based on what was in the note, right? The U.S. currency, I have some on my desk. The U.S. currency used to be backed by something until 1933 and then eventually in 1971 when the currency shifted to fiat and was no longer backed by anything. Government was now in position to print as much as they wanted, and they have, causing the massive debt and deficit levels and the inflation that we're experiencing today. In your analysis, do you see a time coming where in certain states, gold and silver will once again, in some capacity, be able to use gold and silver as legal tender, just as the founding fathers called for in the Constitution.
It's already happening. By the way, these gold certificates, where this is a 20 right here, which was as good as a $20 gold coin. And on the back of it, or on the front of it, underneath the president, instead of saying "In God We Trust," it says "Payable to the bearer on demand" in gold coin.
Exactly.
There are already states that are doing that. Oklahoma and Texas, or Utah, are two of them. The law says you can't make a shopkeeper or a retail establishment take the gold or silver, but it is an option if they wish. That coins issued by a sovereign mint, like the American Eagle as an example, would be used for all debts, public and private, including paying your property tax. And this type of legislation is in front of many of the state legislatures: Idaho, Wyoming, Kansas, Missouri, as I mentioned, Oklahoma, Utah, Texas, North Carolina, and others. They are it's starting to seep into the, I think the representative from Idaho kind of encapsulated it, where he said something to the extent of, we need to allow our constituents to get free of the monetary recklessness of the Federal Reserve and the fiscal irresponsibility of the government, and own gold and silver the way the central banks are doing. So yes, I think it is already moving in that direction. I have become a representative of Glint, a UK-based form of turning your gold into a form of utility, where the physical gold is held in a vault in Switzerland, and they have a deal with MasterCard. You can spend it, but none of that is as important as the fact that the owner, Jason Cousins, has been meeting with, he's been speaking in front of the House and the Senate and talking with state legislatures about just this, about going back to this. And it's interesting, a state cannot issue its own currency unless there's a loophole, unless it is gold or silver. So you can't have the currency of California or the currency of Texas, but you can say legal tender gold and silver coins of a certain fineness and weight can be used for legal tender. It's a loophole. It's in the Constitution. So yeah, I think it already has crept into the collective wisdom of several states, and hopefully it gains acceptance and credibility. That represents to me a sliver of the American spirit pushing back against the lunacy. And I think that's what it will take to gain trust again. In a world where trust has been shattered, you have to have something immutable that cannot be manipulated or shall I say, inflated away to ever inspire confidence again.
Yeah, I appreciate everything you just said. Andy, this has been a fascinating discussion. And before we wrap up here and I ask you the final question, I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and every single expert interview that we conduct, just like this one. It's all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote based on the important Ray Dalio foundational premise titled, "If you don't own gold, you know neither history nor economics." This free gift is a must read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive that free gift on us. Also, I'm positive that you've enjoyed this conversation with Andy as much as I have. Please let him know. Hit that like and subscribe button and leave a comment below the video. Andy, in wrapping up our discussion, my final question, it was going to be about portfolio positioning, even though you're not a financial advisor. I was curious to know what you like and what you don't like, but I want to change it on the fly. I really want you to share in layman's terms with the folks listening why you think everyone needs to own gold and silver and needs to own it now. It's pretty important, but they need to hear it. They're so focused on price instead of focused on the actual metal.
I mean, there virtually is nothing that has stood the test of time and represented wealth the way that gold and silver have. For 5,000 years, these assets, which have no counterparty liability whatsoever, in a world of massive counterparty risk and systemic risk, these are assets that have lived through 2 world wars, German hyperinflation, the Great Depression, every pandemic, everything the world has ever thrown at it. And at the same time, as everyone is enamored with these these AI stocks and cryptocurrencies, the smartest money in the world, the central banks who know the playbook, they write it. They're accumulating it at levels the world has never seen. And so I would simply say that price is the greatest tool of misdirection, Gary. You can misdirect everyone with price, and it blurs its real value if you distort the price, especially in a counterintuitive manner with leveraged futures contracts, which the West has been able to do to support the narrative of a strong bond market and a strong currency forever. And now the Southern Hemisphere central banks, who have become very coordinated, sophisticated, and wealthy, are using that against us. Do what they are doing, not what they are saying. What Zoltan Pozsar said is right. This is Bretton Woods 3. It's all about commodities. And it's about, I think, being a contrarian. It's about not having all your assets in dollars. When I started this company 34 years ago with my father, I was 19. He told me, you'll buy some gold or silver every 2 weeks or I'll fire you. That was the only rule. And I've owned the company for over 2.5 decades, and he won't fire me anymore. He's still, he's been retired for a long time. But we talk all the time, but I've honored that promise to him, Gary, and it was the best gift he's ever given me, ever. And I mean that. Best gift anyone's ever given me. The concept of allowing the theory of compounding to work for you, compounding of time. Not always compounding of interest, but compounding of time. And I've bought something every 2 weeks for 34 years. I have never missed a 2-week period. To me, it's wealth. It is not an investment. Gold and silver is money. It's wealth. Free from this system that we have somehow diverged so far from the Constitution, where it was considered treason to make any money that wasn't species, as it was called, backed by gold and silver, that now we believe the currency in our wallet, which is inflating and losing value every single day, is money. But the real reality is the most well-funded and well-informed traders in the world, the central banks, are showing you what money is, and they are using the currency that we have, which is losing value every day, to trade into real money that has greater significance and greater value, and as time goes on will only increase that. So in a world of counterparty risk, in a world of overvaluation and undercapitalization, in a world kind of gone bizarro here at home, I think gold and silver have never been more important, but not to become wealthy, but because it is wealth. And if you own enough of it, okay, you'll be wealthy under any circumstance, but that's not why you buy it. You buy it, you hope you never need to use it. You'll be damn glad, and it could actually be an opportunity. But if not, you give it to your children or your grandchildren or a church or a charity, because in the year 3000, when the currency in your wallet is hanging from a frame in the Smithsonian, as an example of what used to be, gold and silver will still be immutable wealth the way they were 5,000 years ago. That's why people need to own it, and that's why I own it. It ain't an investment, it's money. And I know it will always be money no matter what happens in this crazy world. Inflation, deflation, you name it, it's outlived it all. So it will be money. And that's what the smartest money in the world is telling us by their actions.
Andy, thank you for coming on to the Metals and Miners podcast and for being so generous with your time, analysis, and ideas. It's been really good to spend this time with you. Would you please share with the viewers any final thoughts that you want to leave with those tuning in, where they can learn more about your work and how they can connect with you?
Yeah, so I have my own YouTube channel that I haven't used in a few years. I'm going to rehash it, but I do 12 to 15 of these interviews every week. And if you Google my name, it's kind of scary how many videos pop up, thousands of them. Our website is milesfranklin.com, where you can purchase small amounts of gold and silver up to $10,000. But if you really want the super good prices that we keep close to the vest, send us an email at info@milesfranklin and say Metals and Miners sent me. And we will send you a price list that is as good or better than anyone in America, or any questions that you heard on this interview, or any questions that you have related to precious metals IRAs or whatnot. We're very proud of our reputation, Gary. We've never had a customer complaint in 34 years, going on 10 billion in sales. We're licensed and bonded in the state of Minnesota. That's the only state in the country that mandates licensing and bonding. So when I moved to Florida, where we've had a satellite office for a few years, 3 years ago, had it there for 15 years in Florida down here, I left my corporate entity in Minneapolis because of that regulation, which holds us to higher standard, being one of the only licensed and bonded companies in the industry in what is federally non-regulated. So we would be delighted, for people to reach out to us. let them know, info at Miles Franklin, let us know that came from this podcast, and we will make sure that your listeners are treated with white glove service. And any questions, they're in play. No questions are too foolish. And or if you just want the price list, let us know. And I'd love to come back on again, Gary. You asked the right questions. You're seeing things clearly, and I'm sure your listeners are benefiting from that. When we have the BRICS meeting in October and all the meetings leading up to it, like the one in September talking about the unit in Shanghai, and the biggest election of our lives in November, I wonder how smooth the sailing will be between now and then. I have a hard time believing it won't be somewhat of a choppy ocean to navigate, but I'd love to come back on, ride shotgun with you, and talk about it. Because as the Chinese curse goes, may you live in interesting times, brother. And these are anything but dull and complacent.
Yeah.
So love to come back on and chat about it, but I appreciate you having me very, very much.
Yeah. Well, I look forward to having you back on, Andy. And everybody, I'm going to put all of the information that he shared up there. There's going to be links. So go check out Andy in all the places that he mentioned, including the other podcasts. It's important that you do listen to him, and it's more important that you get gold and silver into your possession. It's very critical. So Andy, thank you for being here with us. Everybody else, thank you for watching.
Thanks.
I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and every single expert interview that we conduct, just like this one. It's all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote based on the important Ray Dalio foundational premise titled, "If you don't own gold, you know neither history nor economics." This free gift is a must read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive that free gift on us.